All right, well, thank you very much for having us here. We're going to be talking about paper Bitcoin and, of course, addressing or discussing some of the criticisms with a very esteemed panel. So let's just start there. Like, what do you guys see as some of the key, let's say, criticisms of this concept of paper Bitcoin? Is there any validity to those? Do you guys just want to, shout out from your perspective, which ones are the main criticisms you've seen?
Okay. I feel like the main criticism is around, for years, in Bitcoin, like self-custody is a very, very important concept, right? Taking ownership of the Bitcoin. And people see any kind of derivative of Bitcoin as moving away from that ethos. But in my opinion, it's all going to move in parallel. And there's going to be so many different ways to get Bitcoin exposure. And it doesn't mean that, people need to understand that the trade-offs and the risks that they're taking if they go into a derivative product, like a paper Bitcoin, so to speak. You're adding counterparty risk. And so that comes with risks. But for certain people who can't get spot Bitcoin because of mandates or regulatory restrictions, Bitcoin exposure is better than no Bitcoin exposure. So if you go into any portfolio and you put Bitcoin exposure in it, that portfolio is going to perform better than the one without any Bitcoin exposure. And so this is a way to unlock capital. And so I don't really see the tension between those two things of like self-custody and paper Bitcoin. They move in parallel as Bitcoin adoption continues. But I think people in the community are kind of at odds with that. That's kind of how I see it. But Mason or Hafa?
Yeah, I'll actually play both sides, I think, of the argument. When I think about paper Bitcoin, I think the thing that concerns me the most, I go back to gold, right? And gold, in a sense, contained the seeds of its own destruction because the fact that it couldn't be moved along space really well led to paper gold, right? And it was an abstraction of the real thing. Then, with that, it led to credit, because then if you have paper, right, and it naturally can lead to lack of governance, more paper being printed, and a detachment from the real thing. So I think when I think about paper Bitcoin, this is the biggest concern on the left side, that we will end up with a credit system, the Keynesian credit system that we definitely don't want to have on Bitcoin, with an abstraction of an abstraction of an abstraction. At the other side of the spectrum, I think it's what Sam said, not having some exposure to Bitcoin, regardless of what way it is, it's much better than not having any exposure whatsoever. We've seen this in portfolio construction. We've seen this just in the fact that, Bitcoin is the best savings technology ever existed. So the fact that you're giving access of that to, a large part of the population, it's super important, right? We all tend to think, I think, in black and white. The answer to all of this, I think it's in the middle. I like to think that, when I think about somebody like my father, for example, my father can never self-custody, right? He can never have the real thing. It's much easier, much safer for him, an 85-year-old person, to actually have something in a brokerage account that he can have access to, right? So I don't think there's one size fits all, and people have to have some flexibility in the way, in the mental models that they have here. Of course, I want ultimately everybody to be able to verify that, they own the Bitcoin, they look in the blockchain, they can see the address, they can see the transactions. That's ultimately where I think we will get, but we're not there yet. And it's better if these guys at least have some access to Bitcoin.
Yeah, when we talk about paper Bitcoin, I think it's important to point out that there's the Bitcoin ETFs, and then there's Bitcoin treasury companies. And I think when we're talking about paper Bitcoin, these things get mixed together. And I think I think it's important to point out that difference, because the Bitcoin ETFs, I think the main concern there is that it's a massive centralizing force for Bitcoin that may be potentially co-opted by the state. Whereas the Bitcoin treasuries, yes, there is MicroStrategy and they are a massive holder, but I think corporate adoption is something that all Bitcoiners should want to see in the same way we all want to see individual adoption. What is a corporation? It's just a group of individuals coming together to create some kind of value in society. So I understand the criticisms of centralization, but if Bitcoin is going to be co-opted because of that mass centralization, then Bitcoin was going to fail from the beginning, because I think this was just an inevitable step in Bitcoin's journey of mass adoption.
Yeah, and so I guess one of the criticisms that we've been discussing is this idea of, well, what if a lot of the coins end up into government-regulated, centralized custodians? Obvious example being Coinbase Custody, where I think it's like 8 of the 11 US Bitcoin ETFs have their coins with Coinbase Custody, so that's like an obvious centralization point. Does that represent a problem for the ecosystem? Do you think that it will decentralize over time, that there will be other custodians? Or maybe the other way to come at this is, are there just large economies of scale effects that drive it towards, very few big, let's say, tier 1 custodians?
Yeah, I'll give the Brazilian perspective that I think a lot of people from the US miss and think it's a very low probability event, but we live through it. Confiscation is a real thing. It does happen. It has happened time and time again. It has happened in Greece, in Cyprus, in Brazil, in Argentina. For the average American, it's very hard to realize that it exists, but it exists. So when I think one of the best features of Bitcoin is the fact that, it's resistant to confiscation, right? And I think the probability of something like that happening is, of course, at least in the US, extremely low. The US has, of course, still has some rule of law, right? It changed a little bit, still has some rule of law, but it is something that it's a massive feature that I think with time, it's just been kind of like put aside with Bitcoin. I tell this story, I've told this story more than a few times, but I remember when first time I saw my father cry was a confiscation that happened in Brazil, that literally they went up on the TV in one night and they said, all the savings accounts, they're confiscated, they're gone. Overnight, went like that. And at the time, because inflation was so high, all the population had their savings in the savings account, because savings account would pay them interest while the checking account wouldn't pay interest. So imagine, literally people couldn't pay their payrolls at the end of the month. The whole country, this literally happened overnight. There was the 8 o'clock news, the Minister of Economy came in, made the announcement, and that's it. Your whole money is gone overnight. I think it's hard for the average person in the developed country to realize the impact that has on society and in individuals, right, at the end of the day. And when I look at all of that, and then I look at where we're heading in a lot of ways, I always try to educate people so that they understand, you start here with a Bitcoin treasury company, with an ETF, but there's this feature that it's substantial and actually existential for the future of Bitcoin, and you should learn and you at least partially understand how that works.
Yeah, to go back to your question, Stephan, I think the centralization risk for custodian, when you're buying a treasury company, the risk is moving from the protocol itself. If you're holding spot Bitcoin, you just have to trust that it remains decentralized and secure. And the risk surface changes from the protocol to a management team and their ability to execute as well as secure the Bitcoin. You're trusting them to do that for you. You're adding that counterparty risk. So you have to trust that they're doing the right things and they're partnering with the right partners. And I think in the future you'll see more like multi-jurisdiction custody setups. I think I'm pretty optimistic about mini scripts and some of this technology that's kind of starting to get developed in terms of actually having programmed logic into the custody solutions to help mitigate some of the risk. And so I think that's going to develop over time, and I think it's going to get better and better. The market's matured. The market infrastructure is much, much better than it was 5 years ago in terms of all these options we have and their track records that they've built up. But it's always a risk when you have a centralized custodian that there's going to be hacked. We've seen it time and time and time again. It's just how are you managing that risk as a management team? And then, in terms of Bitcoin itself, to what Mason's saying, if you thought that institutional adoption, corporate adoption is going to break Bitcoin, then you should probably sell the Bitcoin because you don't believe in the incentives of the protocol. And so if that's how you feel, I think you have to really question whether you should be long Bitcoin. Because if the incentives don't work, and just because some corporations bought a lot of Bitcoin that the protocol is now going to fail, then it's not as resilient as we all thought. I obviously don't believe that, but I find that people haven't really thought through that, because what is the incentives for these organizations to break Bitcoin or do something bad? I don't really see it.
Yeah. I think there is risk with centralization. I think there's risk with self-custody as well. I think there's risks across the board. When I look at the success of the ETFs or the success of strategy, I'm looking at it through a free markets lens, saying there was a lot of people and a lot of capital, a lot of institutional capital that wanted these products, wanted these solutions to get Bitcoin exposure. And I think it's ironic that the Bitcoin community, which is often libertarian, is telling people or other people using the protocol how they should use it. And Bitcoin is an open protocol. It's going to be used how the people who own the coins want it to be used. And my stance is, who am I to say what you're doing is right or wrong?
So coming to, I guess, more, let's say, the ethos of where Bitcoin came from, or if you talk about the white paper, like peer-to-peer. So there's a focus on this idea of peer-to-peer. So in what ways do you see peer-to-peer still existing in Bitcoin today? What ways do you see that developing out?
Yeah, this is another concern I have when I look at the where we're trending with ETFs and treasury companies. There's been two movements that very few people are paying attention. One of them is the financial markets essentially became the second layer, the most active second layer of Bitcoin today, right? You have around, roughly, last calculations I made, around 10% of the daily volume of transactions in Bitcoin, if you add on-chain and off-chain. It's happening between ETFs and treasury companies, right? So that's, a lot of it's new volume, the volume that wouldn't be on the first layer, but there's a lot of it that it's an emptying of the first layer. I think to some extent, the fact that we're seeing mempool so empty, it's a reflection of that. That's number one. Number two, that I think it's also somehow missed, and I think it's a more important one, there's been an emptying of talent that was focused on the protocol level development, the philosophy part of Bitcoin, that now it's focused on treasury companies and doing other things, right? Some of this is transitory, some of this is, we are an example of that, right? We all spend our time thinking about Bitcoin treasury companies, what we're going to be doing, how do we make the companies more efficient, how we're going to, optimize for the metrics that we want to optimize. And that's time that it's not being dedicated to, and myself, to being coding things in the protocol, to be looking at different things. And that may be temporary. I think different than the first one, there's actually an emptying much more than a new talent coming into that side, right? And that is definitely something that concerns me. I think we are getting farther and farther away from the protocol, and to your point, to peer-to-peer. I still think it's temporary and transitory. In Bitcoin, we see these things. We see waves of new things coming in, right? And human nature is to get attracted to the new shiny thing. So we all get attracted to the new shiny thing. Then you have a stabilization. That shiny thing, sometimes it actually has long-term validity, and sometimes it doesn't. In this case, I think it does. And they have a reversion back to the mean. So I'm still hopeful that that's where we're heading, but it's definitely something that I'm worried. I think we are getting a little bit farther away from the protocol level and where we actually should be.
I guess just to add to that, we are seeing a lot of excitement around new L2s, right? So obviously there's the Lightning Network, but now we're seeing Arc and Spark and Liquid and Fedi and Cashew and maybe other ideas also that are out there that help with some of these fast transactions.
Nice, NASDAQ.
Right. Well, yeah, NASDAQ. But I guess an interesting point that I would raise is, yes, obviously ETFs and treasury companies, we can't deny that, but also look at what Square are doing. They are going to be enabling millions of merchants to just quickly accept Bitcoin, and you can just scan and pay in the US. So isn't that example? Or there are circular economies. There's prior Bitcoin, and there are other circular economies. So aren't we seeing progress on that front also?
Steak and Shake. Yeah. That's another one. Look, I just think that Bitcoin is a global asset, and even today, Bitcoin's being used as a medium of exchange more in other regions, just based on their currencies that are more unstable, or they don't have access to cross-border payment infrastructure, the correspondent banks. They're using Bitcoin today, and there's a lot of brilliant people that are building Bitcoin payments. I think right now the focus is on treasury companies because it's this new thing, and they're buying a lot of Bitcoin, and also where Bitcoin is in its adoption cycle, it's still in that store value stage. I always thought it would kind of go store value and then be used as a medium of exchange over time. That always kind of made sense in my mind. But that's not to say people aren't doing it right now. And that's the difference between like a treasury company and an ETF. If I'm a person and I need to like send cheap cross-border payments, I'm not going to buy a treasury company. Bitcoin can do things that these can't. It's more capital efficient in many ways. If I want to run a Lightning node and run a channel, right, and try to earn a little bit of yield or something, there's all kinds of things you can do with Bitcoin that you can't do with an ETF or a treasury stock. It's just to each their own, and I think they're all complementary to each other, and they all push Bitcoin adoption into all these different parts of the financial markets and capital markets, and it's all kind of good, and it's all virtuous, and it's all just pushing Bitcoin adoption in different ways, and people use Bitcoin in different ways, just like any revolutionary technology. That's kind of how I see it.
Yeah, I think peer-to-peer. Peer has a broad definition. I think if we're looking at it in the traditional sense of an individual, something that's exciting to me is Noster and zapping, value for value, and a new form of social media or social interaction on the internet in a world of AI, where I think that's increasingly important as bots flood Twitter, Facebook, all social medias having some kind of verification via Bitcoin or value for value is increasingly important. But another peer-to-peer transaction that I would point to is the nation state of Russia accepting Bitcoin for oil transactions, and that's another form. I think it's I just want to tag along with what Sam was saying, which is I think Bitcoin is infiltrating the world. It's not the financial system infiltrating Bitcoin. And I think it's important to make that distinction because the Trojan horse is in the building and we are going to win. I think there's a lot of fears of Bitcoin culture changing, the end goal of Bitcoin changing. But no, I see this as kind of an inevitable step in the process of getting to the world that Satoshi wrote about, that we all kind of desire as members of the Bitcoin network.
Can I add one thing? I think there's this obsession with medium of exchange that you kind of have to think about two things when you think about medium of exchange: the value that you're transacting and the time that you're going to have to hold that asset, right? I still have Brazilian reais in my wallet. It's the worst shit coin that you can ever hold, but I have it in my wallet because it's easy, and overnight, it's not going to lose. It's going to lose a little bit of value, but not that much value, right? So it's okay. Should use on a day-to-day. Same thing goes through if you want to get digital. You can use Tether, right? You can use Tether in your wallet for the day-to-day. Is it savings? Absolutely not. The dollar is getting devalued, very, very quickly if you zoom out, right? So in short periods of time, we don't care. I'll use anything, right, to make a payment. I'll use probably what has less friction in the system. And Bitcoin still has friction, and it will always have friction, right? At the other hand, Bitcoin is the best, savings technology ever invented. So for anything that it's higher value, longer period of time, there's no better way to hold value than sitting at Bitcoin, right? I think eventually what people will realize is that for the first time, we have an asset that can be both. It can be the store of value and medium of exchange, but we're not there yet. To Sam's point, I think we need to establish store of value much more than we have today to then actually lead to mediums of exchange.
Now, another criticism that people might have of paper Bitcoin, and I'll grant that I think this may be a little bit idealistic, but the way they might frame it to you is they might say, or me, they might say, look, Stephan, or look, you gentlemen on the panel, if these ETFs and treasury companies didn't exist, people who wanted Bitcoin would have to go and actually buy it, and they would actually have to get the raw thing for themselves, right? Whether they do store of value or medium of exchange, they would actually have to either go to an exchange or peer-to-peer, buy it or earn it or mine it. They would have to do something like this and get access to real Bitcoin, raw Bitcoin, like you're holding it in your self-custody with your wallet or a cold card or whatever hardware. What do you guys think about that? Is that an idealistic view or not?
I'll give you one example, because I don't think I actually think it's a net positive, I think, because it's opening the doors to people that wouldn't buy the real thing. Like I worked in Wall Street for a long time. I have a lot of friends that, have as a square mindset as you can imagine, right? One of them in particular, I know that bought MicroStrategy, I know that bought, the ETFs of Bitcoin. He would never touch real Bitcoin, right? It's too far away from him. Maybe one day he'll get there, but this is new volume that we're getting. It's a new adoption that we're getting. And eventually this person, we all know, right? I think as you start to learn about Bitcoin, eventually the rabbit hole just drags you into, you fall into, and you go through the nights of studying Bitcoin and really understanding. So I think at the end of the day, and I don't have data on this, but I think from what I've seen, it's a net positive. I think we're opening doors to people that wouldn't have access to Bitcoin before, right? There's also, of course, what you mentioned. There are some people that, just because it's easy, they would just buy on a brokerage account or buy the treasury company, but they would be better off, and they probably would end up buying Bitcoin. I think my perception is that it's actually a small amount.
I think it is a little idealistic and maybe naive. I don't know how they thought Bitcoin was going to go mainstream and be adopted. Bitcoin, the ETFs and the treasury companies have been the two largest buyers of Bitcoin over the last year. It's not even close. And so Bitcoin would be magnitude smaller if these vehicles didn't exist that provide better access to institutional investors, people that aren't comfortable taking self-custody, which, in every single journey, and like family member, I have to hand walk them, right? It's first, I usually buy Bitcoin and just have it on like an exchange, or if they want to do an ETF, it fits into their brokerage account. And then they learn about it, and once they're ready, and I teach them to take self-custody, if they want to do that, I definitely say, yeah, of course, let's do that. But there's a lot of risk for somebody who's a beginner suddenly taking self-custody, there's no redos. So I think just some people just want this access. It opens the funnel. Obviously, there's a ton of demand for it. BlackRock's ETF, fastest to $100 billion in AUM. So obviously, they're responding to people who want these vehicles to make it easier to access this market. And I think, like I said before, spot Bitcoin usage is there's certain factors that everyone's always going to want maybe some of their portfolio in an asset that has zero counterparty risk, censorship resistant. They can own it. Like I said, if they have to send cross-border payments, any kind of functionality that Bitcoin could do that these paper vehicles can't, there's always going to be demand for that. And I think they're just going to grow in concert with one another, and people are going to rotate between the two. Bitcoin is digital capital, a foundational portfolio asset, and these other vehicles just help people get in the door, like Hafa was saying, and then they go on their journey. And it's a lot better than it was before, when you only had grayscale and proxies like miners to do this, and that's what people had to do for years. And so now they have ETFs, and they have amplified exposure with these treasury companies, and there's so much more alternatives that they can turn to if they want to. So and it all leads to demand for the underlying. So I don't really see how any of it's a bad thing at all.
Yeah, I don't have much to add to that other than the ETFs and the treasury companies have bought about 6% of the supply in the network, and that means that the 94%, which held the Bitcoin, benefited from the buying, as Sam says. We wouldn't be at the price that we are right now, and it's, Bitcoin's not only about number go up, but number go up does economically empower Bitcoiners to help with adoption, to develop the tools that we need for mass adoption at a more peer-to-peer individual level. So I think there's two ways of looking at it as this is the free market in action. If you don't like it, what are you doing to build a more the world that you want to see? And at MLUs, where we have an app with 46 million users, and we're integrating Bitcoin base layer into it as we speak, because we want that to be the world that we live in.
Just go on. No, it just kind of feels like people are. It's like they're standing next to a river, and the river is like Bitcoin adoption, and they're screaming at the river flowing one way that they don't like to, but it's like yelling into the wind. How are they going to stop this? They're going to go outside BlackRock and protest, or, it's like Bitcoin's being adopted this way, and if you want Bitcoin to be used more peer-to-peer, go focus all your energy and build products and services that make that better and make Bitcoin better. If that's what your passion is and you want to do that, follow Jack Dorsey's lead and focus your attention on that if you think that's very, very important for Bitcoin adoption. I support it all. I support all work, all development on Bitcoin on every single angle.
Yeah, and related to that, there's a kind of another angle of criticism that I've seen, and you guys might have seen this also, which is, let's say, quote-unquote Bitcoiners and the quote-unquote Bitcoin community, should they support these paper Bitcoin efforts, right? Because I guess there's maybe three broad stances. You might be kind of fully against it. You might be in the camp of okay, it's going to happen, but the Bitcoin community per se shouldn't support it. Just kind of, it's going to happen, but you shouldn't support it because in their view, that's against the ethos or the cypherpunk or peer-to-peer kind of idea. So I guess we have to examine maybe the premise of that idea a little bit, because are we then implying that Bitcoin is a quote-unquote community money? Or is it more just no, it's just a neutral protocol. It's nobody's money. How would you guys frame that? Where do you guys land on that?
I think it's normal with any new asset, any new business, anything new, you start with a small community, right? And in Bitcoin, we did start with the cypherpunk community, right? The coders, the programmers, the people that were very privacy-oriented. That's how it started, and that's never going to go away, right? But Bitcoin, it's for enemies. Bitcoin is for everybody. Bitcoin is for, to Wall Street, right? That's what we're talking about. Faria Lima here in São Paulo, which is the Wall Street here, they're buying Bitcoin, right? And eventually the narrative will change, and it's very positive for Bitcoin, right? Because going back to what I mentioned, it's not a fixed size pie, right? It's not that we're taking away from something else. No, the pie is expanding. You're getting more people into Bitcoin. They're coming from different perspectives. Bitcoin is extremely multidisciplinary also. So again, we all tend to look at Bitcoin from the lenses that we naturally come from. We look at the economic side of Bitcoin. Some people come from the philosophy side. Some people come from the computer science side, right? And it's natural. I think that's part of the growth. I don't think even the hardcore, old school OG coder that was helping on the protocol level should be worried about that, because that's, in my view, extremely positive for Bitcoin at the end of the day.
Bitcoin is an open, neutral protocol. It's permissionless. And so anybody can use Bitcoin however they want. And to say that somebody's not using Bitcoin correctly, I think is asinine.
Yeah, I agree with that. It's nobody's money. It's everybody's money. The point I would make again is I think the Bitcoin treasury companies are a Trojan horse, and I think an example of this is Strategy's largest shareholder is Vanguard. Vanguard's very anti-Bitcoin, right? So it's very ironic that they are the largest shareholder of Strategy. Capital, which otherwise would not go into Bitcoin, is going into these treasury companies, whether you like it or not. And the benefit of that Bitcoin being bought is going to every single person on the network. So you can not like it, but I think the because it is a Trojan horse, I think you will benefit from it.
Yeah, so I would summarize a little bit of that as, well, maybe there's not one Bitcoin community globally, there are multiple communities. And to Hafa's point as well, that people come from different interests, right? You might be more a cypherpunk side, you might be more into financial engineering and doing treasury companies, you might be more into like development protocol things, or you might be into you might be an MOE, Maxi, medium of exchange, and they're not all going to agree. You know, because that's just the nature of it. Like, it's just gotten so big that they're not all going to agree. And, you know, so be it, right? Now, I'm doing my best to try to still man the opposition, but of course, I'm also an investor and advisor with Orange. So, you know, I'm obviously biased. I see it as, you know, all of these things are going to grow. But let me try to still man this. What about if everybody ends up in kind of KYC regulated platforms, does that mean like we get NGU, we get number go up, but do we lose freedom on the way? Is that a possibility? That if we don't have enough of the peer-to-peer side, that we get NGU but not freedom? What do you guys think?
I think as long as we have an escape valve and we can all default through the protocol, we're fine, right? So even the people that are buying the ETFs or buying the treasury companies, as long as Bitcoin, and Bitcoin is much stronger than all of this, it will continue to be there, right? Let's say tomorrow we wake up and there is a threat that, I don't know, the US is going to shut down the banking system. Immediately people are going to start migrating to Bitcoin. Can everybody migrate? No, the door is going to be very narrow, and the ones that go first are the ones that are going to save themselves, right? I think the traditional Bitcoiners will already be there. They'll already be in self-custody. But the escape hatch is still there. Bitcoin, you know, as a escape hatch, it hasn't closed. I don't think it's going to close. This is all, again, we're adding value to the Bitcoin network that wasn't there, and in my view, wouldn't be there. I have a lot of, you know, criticisms to treasury companies, but that's not one of them, because I think we are adding a new layer of people that wouldn't be having access to the markets.
Yeah. I think with Bitcoin, the cat's out of the bag. I think we're imposing freedom onto the world, and as long as the nodes are decentralized and the network is secure, Bitcoin will mold the world in its image.
The network's like never been healthier too, in many metrics. You know, hash rate, the 1 zettahash, like that's incredible. The hash rate chart is like the hash rate chart is like one of the most bullish charts in Bitcoin.
Not for me.
Yeah, not for you. But for all the users of Bitcoin, it is. And same with, I mean, you could use proxies for a number of addresses, right? Which is, you know, not the best for users, but it's something, and it's going straight up. And then you have the amount of people holding Bitcoin for longer than 2+ years, a sign that people are using it for long-term savings. Straight up, right? When you zoom out. And so like the health of the network is growing great. Fundamentals look great. And so what's the problem?
Yeah, I mean, I'm with you. I'm just doing my best to still man.
No,
but I got one other criticism I've heard from people. And again, I don't quite agree with this criticism, but I just want to hear your answer. The criticism is of treasury companies that they're going to buy so much Bitcoin and that now they're all going to start selling and they're going to start causing a big dump. And as an example, they might point to, let's say, Sequans as an example, or others in the future may end up dumping all this Bitcoin. And so will that cause a negative consequence to all the Bitcoin users out there because of like the swings of the volatility of that?
Yeah, I think you need to put it in context. Strategy holds 630,000 Bitcoin. The next largest corporate Bitcoin holder in the world is actually a Bitcoin miner, Marathon, with 55,000, right? So What was the stat you told me yesterday? That Strategy holds 60% more than all of the other Bitcoin treasury companies combined. I think if there was some kind of existential threat with Strategy, maybe around custody, personally, I look at their capital structure. I don't think there is a risk of liquidation, but let's say that did happen, then yes, potentially. But for the smaller ones, if there's a company with 10,000 coins and they dump all of it, I think we're at a stage where the market is large enough that it will absorb it pretty quickly. What I like to point out was there were 80,000 Bitcoin dumped by a single whale this summer, which is $9 billion, and the market absorbed it handily. So there's deep liquidity, and personally, I look at the status of Bitcoin treasury companies every day, and yeah, there's a few which are mismanaged, and some might fail, absolutely. But is there some existential threat to the price of Bitcoin, or will we go into a prolonged bear market because of the smaller ones? No. Strategy is another case.
I don't know if I have much to add. I agree.
Yeah, I'll go very quickly through my journey on getting into Bitcoin treasury companies, because I was, and I still am, as I said, very critical of a lot of things in Bitcoin treasury companies. I came at the other end of it. I sit today at 21's board, and so I went through a couple of things, and so I'll tell you what my criticism was in the beginning. Coming from financial engineering background, I always try to separate two variables when I look at any kind of transaction, alpha and beta, right? So very quickly, without getting too much into detail, what beta really represents is how much leverage you have. So I can have a 2x Apple, and it doesn't mean that, I say I create a hedge fund, and the only thing that the hedge fund does is that it's a 2x Apple, right? So if Apple is up 10%, I'm up 20%, it's very easy for me to say, well, I'm the best manager in the world because, I'm overperforming Apple by 2x, right? Well, if Apple goes down by 10%, I'm going to be down more than 20% in reality, but let's say it just go down 20%, right? So it cuts both ways. Beta is directly related to credit and easy credit. So if you have access to credit, you can build beta in everything that you want, right? That's not value add. That's just leverage in the system. Value add comes from alpha. So instead of you moving that curve down, you're moving it up and down in parallel moves, meaning that if Apple is up to, from 10 to 20%, I'm going to be up 40. But if it goes down from, 0 to minus 10, I'm going to be flat. That's alpha that you're generating because you're outperforming an asset in different scenarios. The whole way that I approached treasury companies in the beginning was looking at them as a trade. I think these guys are doing a trade. They're getting credit, and credit at some point is going to dry up, even for MicroStrategy, right? And they're just putting that capital into Bitcoin, and that was my first criticism to treasury companies. There's still a lot of that, and I think the companies that only do that, they are going to fail. They are going to dump their Bitcoins, eventually they're going to have issues. What really excites me is when you start thinking about where this is heading. As in any new market, right, you really don't predict where the market is going. And I think there is an opportunity for the Bitcoin treasury companies to become the banks of the future. Because they have massive balance sheets. They're going to be offering other services, right? I think they're going to have checking accounts, saving accounts. I don't know. There's several things lending. They're going to happen around treasury companies. That part excites me a ton. And I think this is how we're going to get to much broader Bitcoin adoption, because that's a revolution in the banking system that the banking system has been due to have for 30, 40 years, right? That's kind of like how I got to the other side of the argument of this.
So I guess viewed in one way, as Michael Saylor says, it's like a gold rush and people are trying to accumulate a big stack, and then in the future, some of these companies may become Bitcoin banks or financial services of some sort, and others may do other things, right? So anyway, we've only got about 40 seconds left, so I think that's probably a good spot to wrap up there. But I guess, we've touched on a few concepts around, is it a centralization risk? Does it impinge on peer-to-peer? various other ideas. Does it give us NGU but not freedom go up? I guess we've addressed a bunch of these. So hopefully that has at least given you some food for thought, something, or you've taken something away from that about ETFs, treasury companies, whether you want to participate or not, or whether you just want to go the peer-to-peer, and not your keys, not your coins. So let's leave it there. Everyone, please put your hands together for our panelists. We've got Mason, Sam, and Hafa. Thank you very much, guys.
Thank you.